This year marks the 10th anniversary of the Credit Card Act. What's that, you may ask? Well, you're not alone. Almost half of Americans don't know about that law passed in 2009, a type of Bill of Rights for credit card holders. So joining us with more is Matt Schulz, CompareCards Chief Industry Analyst. What's the biggest protection that consumers got in 2009 from the Credit Card Compare Act?
Well, there were lots of big protections that we got. One of them was that it limited the cases in which a credit card company could raise your rates. So now in most cases you have to get 45 days notice before your interest rate can increase, and that wasn't always the case.
That's if you read the mail that comes from the credit card company, right?
Which nobody does. Which nobody does, yes.
Right.
So in general, when you look at the changes that we have seen in the way that Americans use credit cards, are we seeing more responsible spending? Would you say that we're seeing people more protected, not just as a result of that act, but just consumer behavior?
Well, especially young folks are far more protected than they once were, because when I was in college, every dorm room was...
Right?
Yeah, I remember those days.
It was crazy.
Yeah.
There were banks everywhere. Every dorm room mailbox was full. Those days are gone. And that's a good thing because it keeps folks from getting into debt. I had $10,000 of debt when I was 22, partially because I was an idiot making a bunch of bad mistakes. And that sort of thing happens a little less. But there's also the downside of there's a little less real-world experience that people have with credit because it's harder to get those cards.
But there was also, as I recall, in 2009, they used to do a different kind of billing with the credit cards where you could get caught in this kind of few-day period. That's been eliminated. They've got to notify you the actual due date, when it's due, and...
Yes, yeah, a lot of disclosure sort of stuff and a lot of billing-related issues for sure. And also something called universal default, where if you are late with a payment on one credit card, it used to be that all your other credit cards could jack up your interest rate. That's not the case anymore.
Matt, let's zoom out a little bit and just talk about the way people are using alternate methods to pay other than plastic. Sure. We talk about Apple Pay, which I think has kind of not caught on quite as fast as people predicted and maybe would have expected. It's getting there, and then just mobile in general.
Venmo,
kind of,
PayPal.
Contactless. But talk to me about that. Have you been either surprised by the progress there, or is it as expected? Because I think kind of the death of plastic has been greatly exaggerated. I mean, putting in the card and inserting, and now that we have chip, it's a pretty good technology that I think is still going to be around for quite a long time.
Yeah, in a lot of ways, a lot of the technology involving credit cards is a solution in search of a problem. People don't really have that much issue with the good old plastic. And I do think that, I use Apple Pay myself, I like it. And I do think that we will see it grow more and more. In fact, Target just recently came out and said we're going to start accepting Apple Pay a little bit more. But what I think the issue is that the expectations were a little bit unrealistic. These things move glacially.
Right.
It's coming. It's just going to take a long time.
Well, but what do the numbers look like now? So we obviously have continued to see credit card debt rise, but in terms of the number of people and the number of credit cards, has that increased? Has it slowed? I mean, what is the picture telling us?
Yeah, the number of accounts is still growing. It's not growing super quickly. And the truth is that there are a lot of people who still bear very fresh, very raw scars from the Great Recession. And the last thing anybody wants is the opportunity to create more debt. So they're going other directions than credit cards.
But at current debt load, we're back to where we were right before the Great Recession, if not worse. People are carrying more credit card debt, which is the worst kind of debt to carry.
Especially student debt.
Yes, yeah. And when you factor in the student debt and the fact that we are at $1 trillion plus in credit card debt, which is higher than it's ever been and only going higher, it's kind of a mess.
So even if we don't, say, go into a recession, if we start to see the economy slow, if we start to see job gains slow, what's going to happen to this credit card debt?
I think it can get pretty ugly pretty quickly. And I think what we saw with the shutdown might have been a little bit of a preview of coming attractions, because everybody's paying their bills now when the economy is good and when their jobs are secure. But most people are just a missed paycheck or two away, or a medical emergency away, from being in real trouble.
There is useless trivia here. March 27, 1970, Life magazine, the coming age of credit, and the revolving, they knew back then that keeping people in revolving debt was good. Or, well, for the banks, the average debt was about $121 per cardholder in 1970. Matt Schulz, CompareCards, thank you for joining us.
Thank you.